Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Actually, I've been doing that lately. Daily Brief to be. Welcome back to the Daily Brief. Anyway, actually, it's so funny. Some people actually even put "love the intro." I don't know when we're gonna get all sort of formal and have actually like a formal sort of lead into these videos, but one day I suppose we will. Right now, it's Brian's crazy verbal intro for you, and you never know what octave I'm going to hit on a daily basis. Anyway, blah, blah, blah. Get on with the show, Brian. As you can see, it's slightly past the top of the hour, 9 o'clock on the West Coast, and here we are. It's the Ides of March, March 15th. Dun, dun, dun. And I suppose it makes sense that we see that the world's falling head over heels into chaos. We often say that probably the best measure for when equity prices start actually getting people's attention and the traders start talking about trend reversals and stuff is if you see greater than 2% movements on a day. So even now you can see, and I don't even know if this is updating because it doesn't look like it's moving. Oh, there we go. You can see the U.S. market is even just a little bit above a 2% loss on the day. So, I mean, this is how crazy inflated our world is. Money, what the hell is money even worth? Dow's down 588 points, and it's not even a 2% move. But I think the news of the day clearly is Europe. The contagion of the U.S. banking system woes seems to be spilling over into European banking system. And actually, I put a tweet out here, but nobody really found it too amusing, although I did say it to Chris, and he kind of got a chuckle out of it. But I think actually they probably should change the name from Credit Suisse to Debit Suisse. Because I get the distinct impression this banking giant is not long for this world. Anyway, we'll see how it goes. It is the Ides, so I don't know whether it really makes a heck of a lot of sense for us to get too wrapped up in the actual price action today. And if anything, I like to work with the gang in our day trader community, sort of people that have completed our education program, so I don't need to worry about them blowing themselves up. And come in, and I primarily focus on gold, crude, and the ES. Didn't really have anything set up for me here this morning. I am interested in gold. I think gold's coming into an interesting level here. The question, of course, is are we still in April's or are we in June's? But here is the April contract. So, Brian in his, reload zone, 78.6, Brian's favorite fib, blah, blah, blah. Got a nice foggy boggy up here as well. There was an 877 off of this smaller foggy boggy. And actually what I set my watch to it. I talk to you guys in these videos about it all the time. If you don't know about this or you're new to this, for heaven's sakes, write this stuff down. But we got a big old price gap that was just filled in on the April gold contract here. So you could have made the argument down here. You probably should have been thinking about this as an objective on the chart. So whole bunch of levels coming in there on the gold, but I drilled down to the lower time frames and you can see I'm sort of humming and hawing. Did have 78.6s. There is the ATR script just slightly ahead. We have a trend line resistance that this trend line drawn actually goes right back off of the original market structure bottom here. And I often find that this is what happens with trend lines is market respects it on the way up. It usually loses these trend lines, and then down the road you can see how it actually comes back into play here. That's why it's so important to understand active versus potential trend lines. So this is an active trend line, and I think actually it's probably going to represent a pretty good trade location here. But I've been humming and hawing. I didn't really pull the trigger on anything. This is about the closest I came to considering a trade. Frankly speaking, it looks like actually that might have been a half decent little 78.6 level there. Anyway, that's about as close as I came to considering day trades this morning. Of course, with the stock market and the way it's acting, I got nothing here. What's concerning about the stock market, I suppose, if we take that same logic, higher time frames, where's trade location? This is the Dow June contract, and kind of like what I just showed you in the gold market. Look at the size of that gap. So if I was thinking about buying, I still have to wait for the market to come fill down here. But look at this. I mean, basically, last fall when this contract was forever out there in the middle, way off in the future, this is all Swiss cheese down here. So I'm not too excited about going heavy in on the stock market. And if anything, everybody should look at this and go, that looks like a big fat M. Maybe you ought to cool your jets. And of course, if we look at the actual market that's sort of driving this chaos, the financials, that's what this is, the XLF. We were passing this around the site today, and gee whiz, this is an absolute textbook. I don't even know what that demonstration example. I'm not even quite sure what you use of this whole Feigenbaum and chaos theory concept, where you have your market structure top, which paints 2.618. The market dumps into 2.618, then rallies right back and checks the original breakdown, Wyckoff check, blah, blah, blah. Rolls right over, so, and gapping lower. Somebody was actually pointing out, I couldn't believe it. I think it was Kevin, one of our longtime site members from a while ago. Oops, what the hell did I just do there? And he was pointing out that the S&P 500, S&P 500, folks. I mean, let's start to talk some serious indexes here. This is, and you can see I was potentially drawing out trade locations and all that kind of fun stuff. But he had pointed out this is an outside downside weekly key reversal. That is about as negative gets. So I'm a little bit leery about really stepping in on the long side of much here. Like I said, I was interested in that gold market. It is up in an area where I could maybe potentially think about shorting if calmer heads prevailed. So I am watching this up in here. If I do get a setup, I might think about doing something. But the stock market and debit Swiss and all those issues, I think I got to leave that stuff alone for now. And the crude oil market, we haven't even talked about the crude oil market. Of course, I think half of the reason why the energy market has been as strong as it has of late was just simply because the Gretas of the world had all of these politicians by the short and curlies. And it was almost like this woke kind of, you have to be politically correct in anything that you do, Mr. Politician, or we're going to make sure that you don't get reelected and all blah, 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 whatever. I think on balance, Biden had basically bought into that nonsense. But it seems that the pendulum's swinging back a little bit. And with his news about opening up drilling in Alaska, woo-wee! I do believe the bubble is popped in the crude oil market. And of course, for things like the Canadian dollar, this is not a good sign. And interestingly enough, in the mid-1980s, the oil market broke and the Canadian dollar collapsed on that event. And one might even argue that half of the reason why the Soviet Union collapsed was because of the collapse in commodity prices. So the one way to actually bankrupt a country like Russia, and, interestingly enough, it will have spillover effects to all the other commodity producers around the world. I've often wondered, why on earth is there this monstrous city in Dubai, which is out in the middle of nowhere? They have no industry whatsoever, but it was all built on the phony baloney oil money. And I wouldn't be surprised if by the end of this cycle, Dubai, I wouldn't even be surprised if a lot of those Middle East countries, the whole landscape of that whole society completely changes. But anyway, only time will tell. Point here is, I believe the oil market has broken. I think a big driver was, holy crap, the Americans are going to produce a whole bunch more oil again. And they're ramping up, and it sounds like the woke politics is finally playing itself out. when I go through and watch those YouTube shorts and stuff like that. The woke people are really on the defensive right now, and the anti-woke movement is really, really strong. So anyway, point of the matter here is the oil industry, I think, could be in a bit of trouble. Now, the cool part about this, watching these price charts and stuff, is, of course, what I was talking to you guys about there with the I guess it was the XLFs I was showing you with Foggenbaum levels, and we were kicking that around the site this morning. Interestingly enough, the Foggenbaum levels on the XLF actually also correspond really nicely with harmonics. And so one of our harmonic gurus, Stephen, was pointing out that a nice stab down into this area would actually be a really pretty harmonic and set up an interesting PRZ. So I guess the point here is that, how do I say this? I get the feeling that for a couple days, probably through the weekend, that the world was kind of going, ha ha ha, USA, you suck, your banking system, you're all corrupt, and now the world's economy is going, oh, maybe we're not immune to this as well. And if anything, this financial crisis, I think, is a little bit far from over. I still think that the Americans are going to do better out of this in the long run than the global economy. I would be very, very, and you've heard me. I mean, the message from me hopefully never changes. It should be exactly the same. Something about Canada being a short. And the irony of it all is they say, what's the cure for high prices? The cure for high prices is high prices. So what a surprise. On top of the fact that Canada's primary sort of economic engine, which I think, substitute drama teachers still don't understand, is crude oil. The crude oil market's going to come off here hard. Actually, before we get into this, I just wanted to show you that image. I even tweeted it out because I think this is pretty damn compelling. The commodity market should have broken there, but they didn't break because of this whole sickness, sort of weird nonsense economy that we went into there for a couple of years, right around that massive Jupiter-Saturn cross, 80-year money cycle pivot, blah, 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 blah. Where the hell's that damn page? I hate when I do this. Okay, I guess I'll go like this. Oh, here it is over here. So I tweeted out earlier, if I showed you the XLF, and the way that Foggenbaum played out. I mean, just absolute textbook. So why wouldn't this do exactly the same thing? And look where 2.618s are. Holy crap, $40. So get ready. And the irony of it all is this is going to be mute. Anybody who actually has any money, who has a job, who has a family and want to raise their family and maybe go on summer vacations and interestingly enough, I don't know whether you remember in the mid-1980s, there was a famous movie with Chevy Chase called, what the hell was that called? I think it was just called Vacation. And it was about the family taking a road trip from like Chicago to LA in the 1980s. Well, I think you're probably going to go back into that kind of society. And the one easy way to expedite that and, make life more livable for consumers is to knock these commodity prices down, knock things like unleaded gasoline down, crude oil down, and the charts are speaking to us. The question ultimately is anybody listening? I was thinking, just for the record, because I'm an old commodities broker, you buy your unleaded the middle of February, you sell it the middle of May, you made money 9 out of the past 10 years. Well, maybe this is that ninth of 10 years where that seasonal trade's just not working because of, extraordinary forces that are going to overwhelm the seasonality trade. I don't know. It is interesting to see, for whatever it's worth. I think that the unleaded market actually is still holding in here okay. But the crude oil market is just getting smoked. Where's our unleaded? Well, unleaded down good, 5-6% on the day. Yeah. So and now this is an interesting chart because you can see we gap violently higher. So are they all just doing nothing more than just filling in the gap here today? And of course they'll print just an absolute train wreck day. I don't know. So we'll see how the unleaded trade works. In a weird sort of way, you might even argue that we banged into that 200 SMA, and it just acted as a brick wall of resistance in the short term. Anyway, we'll see how that goes. So the point I guess I'm trying to say here is, Saudi Arabia was, I think, if I'm not mistaken, somebody correct me in the comments to the video if I misquoted. But if I'm not mistaken, I think Saudi Arabia was the one who came out and simply said, you know what, Credit Suisse, we're not feeling so rich anymore, so the taps have been turned off. And as a result, I suppose you could argue that the U.S. banking system has the Fed and it has the FDIC and all that to ensure that these international banks, they don't really have anybody. You might even argue that the backdrop for an international bank like this is the Saudi National Bank. What? How does that work? And of course, are the Saudis guaranteeing that they'll come in and save things like the Bank of Switzerland and stuff? And this Credit Suisse is not the Bank of Switzerland. So my hunch is that the world economy is actually going to try and play catch up to what we saw out of the U.S. this past week. Has the U.S. system itself stabilized? I think so, but pretty down day today. We'll see whether there's any follow through on the banking woes, I guess you'd say. I mean, I showed you that XLF. It looks to me like the banks are correcting. And if we look at the big banks down in the States, you look at things. I think we did this the other day. Look at something like Goldman Sachs. I mean, you see the smiles. What are we supposed to think if we see the market smiling at us? And then, you zoom out and you say, well, okay, what's the context of this smile? Are we at the top end of the range? Are we at the bottom end of the range? You can see where we got pretty fluffy there. And of course, this is basically, shouldn't we debate mortgage or shut up and give them all the money that they want? And this silly stock went from 142 up to $400 a share. So, unfortunately, Mr. Powell has basically said, because the socialists have just basically gone and shot the wad and just spent so much money that they really don't have and created these absolutely insane deficits. Of course, the socialists go, well, what are we supposed to do in the health crisis? Well, maybe just not spend so much money, but try telling a socialist to cool it on the spending if they get the green light to spend money. It's impossible. Substitute drama teachers. Oh, God, what a dickhead. Anyway, you can see the holes on the charts here. So ironically enough, probably the end game of all this is we actually have to come right back down and fill in these holes. The question ultimately through all of this is, I don't think that something like Goldman Sachs or, Joey Diamond, same sort of thing, I don't think that they're in danger of going out of business. You can see actually Joey here, they already started to bring his stock all the way back down to fill in those gaps. Still another gap down here that could be filled in. I don't think these guys are in danger of going out of business. Stock price is probably going to be weak. The whole sort of license to print money. I'm actually hearing a lot of people in sort of social media influencer circles, especially one guy I tweeted about recently, where he's basically openly saying do not support the venture capital industry, which is really dangerous because, one of the reasons why we had the horrible stock markets in the 1970s was there was a very popular movement in social culture to not support the capitalists, to not support venture capital, to not support the growth of the economy, to not support full employment. If anything, we got to spend more money on military. And we got to go and throw money into black holes like, handing over. I mean, it's so tragic. Talk about inefficiency. If you go and look, somebody count up how many Humvee vehicles the U.S. government bought and paid for, i.e. U.S. taxpayers, and of course this is a fiat currency system, so it's literally everybody in the world bought and paid for these U.S. Humvees. They just left in Afghanistan. I think it's something north of like 1,000 Humvees. And each of those things goes at like about 50 grand a pop. I mean, it's something like 50 helicopters. Each of those is like $5-10 million a pop. So, listening, yeah, I understand Ukraine. We want to support democracy and we want to push back the aggressors, whatever. But how many Humvees are you going to find on the black market after all the dust is settled because some Ukrainian oligarch that's corrupt as crap is going to mysteriously end up selling these things into the black market and pocketing the money? You can just see it happening. I mean, the way that it's just a blank check to the Ukrainians, give them anything that they want to try and stop Vladi. Yeah, I mean, and the story plays emotionally very well, so it's understandable. And of course, now that I've said that, you're probably going to have a whole bunch of people go, are you not defending democracy? Are you not, supporting, the freedom of the West and all that? Are you actually a Vladi lover? Blah, 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 blah. You know how it goes. Anyway, if anything, my tweet the other day, when it comes to managing money and managing risk and stuff like that, I believe that the sickness, I believe that what you see going on in Ukraine and all that, these are perfect levers for the central bankers to just basically twist our emotions and get us to act emotionally. And, kind of like the other day, banged out a really nice win in crypto. And, you would, if you listen to the media, it would be sort of like, well, you should be panicking and you should be pulling all your money out of all the banks and, burying it under in your mattress and stuff. And I'm just sitting there just running my business of trading. And the only way that I can do this is that I built my plan based on my conditions for when I'm going to risk money in the market. And I'm not going to get sucked into their plan, right? And unfortunately, shouldn't wait to pay mortgage or pension. I'm getting the money to do whatever they say. Got to sacrifice my life to save capitalism. That is actually feeding into the banksters' plan. That's exactly what they want you to think. And I actually, on social media, I got into a big rant the other day about, what is this whole climate change narrative about? And sadly, I think it's just really about funding the banksters' desire to ram down our throats $100 trillion in lending, of which, of course, they collect interest on. Now interest rates are nice back and high again, and the $100 trillion, that could be like $5 trillion in their pocket of just easy living money. And they say, why are the Rothschilds more rich than any king? Well, it's stuff like that. Anyway, so rant. What I would say is, let's not try and get sucked into the emotion of all this. And actually, we had a really fun meeting last night. Do you find it interesting that the stock market, the breadth indicator, is actually telling us to get interested on the long side? Market's getting washed out. We're going through the Ides. And I get the impression we're probably near some sort of pivot bottom here. Probably best to maybe just let this Ides play itself out. Let's wait for some W's in price and then start getting in there. If anything, this crypto market recently was a great example of that. The breadth indicator can sometimes be a little bit early. It did foreshadow a pretty big rally in crypto, and we did have a pretty nice run there. The only problem is when I see an image that looks like that, can I justify actually buying now? And unfortunately, when it comes to something like crypto, gotta just cool my jets. And we look at the Bitcoin chart, there is that rally. I mean, it was substantial. Don't get me wrong, big rally. The only problem is this actually is inherently a bearish chart pattern. It's called a megaphone. And, on the third tag at the bottom, I suppose you could have hunted longs. I don't know whether I really have that. What I'm worried about here, there's the Ides of March reference, but what I'm really worried about here is we still have this FOMC meeting coming up. And this market, and all the stock markets, everything, they like to rally into these FOMC meetings and then just get absolutely punched out on the other side of the meeting. So because of that, and the fact that we are rallying right up against the top end of this megaphone, I'm very leery. If anything, I almost kind of want to go on vacation until we get on the other side of this FOMC event. So it is what it is. If anything, I was kind of joking with site members today. If I'm really lucky, I might actually, before that FOMC even starts, I might actually be able to go and buy stuff that I just sold at huge profits, go and buy it right back down at the bottom ends of ranges. So that's the kind of volatility that we're dealing with here. And if you can't handle this kind of volatility, my suggestion is just leave this stuff alone, because if you end up chasing because the market's zooming higher and you fear of missing out, and then you see this, man, it's gonna turn you suicidal. If anything, you got to zig when they zag, and you got to zag when they zig. And if you get caught chasing in this kind of market state, you're going to get your head handed to you. So be careful, everyone. All right, so
Hey,
your
Brian.
summary. Oh, I know we're coming up on bottom of the hour. Is that what you wanted to remind me?
Yes, it is.
All right, you're the man. Awesome. So let's see if I can try and just summarize this in maybe a sentence or two. Brian's an idiot. Brian's crazy. Brian's full of rants. Brian's an idiot. All right, there you go. Merry Christmas. But I do make money from trading, so if you're an idiot and you make money from trading, I suppose that's okay. Message generally speaking, uh, I think that the European and international markets are just as susceptible to what you saw happening in the US banking sector, but there is no sort of Uncle Jerry for the international market. I hope you all understand that. I'd also say, too, the writing is on the walls. And especially with the fact that crude oil prices and commodity prices are coming off. Commodity countries, I mean, who wants to move to Russia now? I mean, that's just an absolute shit show. And frankly speaking, I think the Russian economy is much, much, much worse than what Vladdy's going to let you in the West know. We do have anecdotal evidence coming out of countries like Canada and Australia, who are commodity producers, that life is pretty damn challenging. I would be very, very leery. If you have, and the interesting thing is that nobody's really a motivated seller right now. But a lot of people who bought these houses bought adjustable rate mortgages. They bought 5-year paper. So if and when those mortgages come due, you can see right now, is there a ton of people chomping at the bit to go and buy houses right now? No. But at the same time, too, there aren't a massive amount of motivated sellers. So as a result, everything's just sort of humming, just flatlining here. The sales themselves, nobody's stepping up to buy this. Everybody's hoping that maybe, hope, interest rates go back down. But what I showed you on those XLFs and all that, and the crude oil price and stuff, the world economy itself can't sustain these prices. And I've always said, what's the cure for high prices? The cure for high prices is high prices. So this is the writing is on the walls here. Would say I thought it was interesting. Had an interesting conversation with one of my American buddies in the day trader room this morning, where it turns out that a lot of people that were fortunate enough to lock in those mortgages, long 20, 30-year mortgages down at 3-4%. They're like, I don't want to give this mortgage up. This is an absolute gift from God. So they're actually turning into now landlords, where they can't really afford to stay in the house, but they don't want to give up that insanely low mortgage rate. So now they're just renting out the house to a third person. So this is probably one of the main reasons why the prices themselves are not falling. But the interesting thing, I don't think you're going to see it so much in the US. I mean, I do definitely think that activity is going to slow down. But something like Canada, where these prices were just absolutely ridiculous, I just don't see how new home buyers are going to come into the market at these levels. And the backdrop's not getting any better, it's getting worse. Um, Econs themselves, like I said, started off the conversation with, we got to be careful. If anything, things like Portugal and stuff like that has started to claw back all their incentives for international people to come and buy up their real estate there, and you might just find that, the golden visa's back on. Please come back to Portugal. Please, please, please. We're starting to see some serious technical deterioration out of Europe right now. If anything, maybe that'll make Chris's life over there in southern Spain a little bit more comfortable. Not so much the rich people running around like crazy. You notice the selling is accelerating down in the States. This is the Ides of March, so it will be interesting to see how this plays out into options expiry on Friday. The data itself coming out today, inflation numbers are okay. They're not really terrible. They're not ticking up, which is good. And actually, we had one data print here. Core PPI numbers actually came in negative. So this is the one sort of reprieve. Of course, I talked to you yesterday about retail sales in the Johnson Red Book. So you can see that the consumer is getting hit here. This is exactly what Jerry wanted. Remember, he wants you to feel pain. So it is happening. The one part of the market, though, that it's not happening yet is in the housing industry. And interesting, the Canadians actually stopped raising interest rates, and there go the damn housing starts again. They're starting to ramp back up. So I don't think that if you really want to contain this inflation problem, I don't think the Fed is done yet, because, guys like BlackRock and all that, they're the ones who are manipulating the housing market. Housing is now been officially securitized. And Jerry has got to get those people to start feeling some pain. So it is interesting that they just let up for 1 month, not raising interest rates in Canada, and all of a sudden the housing starts ticking back up. So I don't think that they're done. It is interesting to see that the consumer is starting to feel pain, but I don't think that this is over by a long shot. Anyway, we'll see what happens. Only time will tell. Yeah, I think that's about it for the broader market summary. Thought it was interesting when we actually went through ideas to consider on the buy side. Canadian utilities came out with huge outside-upside key reversals. That's a pretty damn big buy signal where you get like an outside-upside key reversal off a double bottom with a nice bottom in momentum here. Very powerful signal. This guy's yielding about 5.5%. So I get the impression that a lot of people are running into this is a utility. It's very boring. I get the impression that the utilities are going to lobby to be able to raise their rates on consumers because of all the inflation crap. Substitute drama teachers have not reined in their spending yet. So as a result, my hunch is they're going to be approved to raise rates, which is beneficial to the company. And of course, flight to quality. Maybe I just want to get the hell out of the banks. I know that people have to pay their electric bills and their heating bills, so I'm going to go, hide in a nice utility that basically their business model is guaranteed, especially in the middle of winter in Canada, if you know what the weather's like here. And then finally, sort of a nice little treat, caveat emptor. Obviously, do your own due diligence. This is an interesting one that we talked about yesterday. Turtle Beach Corporation. If I understand correctly, they sort of sell headsets for the gaming industry and the online industry. And their latest product offering is sort of directly targeted towards girls. Pink headsets, that kind of stuff. I don't know whether this thing's actually a buy or not. It's caught a bit of a bid here recently. Really simply put, throw it on your radar screen. If the W's confirm, then you got something to chew on. So this is it. It's like literally, it's not a buy just yet, but I'm giving you as a treat. You can see obviously down at the bottom end of its range, nice structure. Give me a W. That will be our anecdotal evidence that the market believes that, hey, girls are buying these headsets and the product offering's working, and rock and roll, this thing's a buy. So there's a nice treat for you to chew on. Do your own due diligence, of course. Not financial advice, just something I'm very interested in. And if this W does fire, I'll probably go pick up a few hundred shares just to have some on the books. Okay, I think I'll probably leave the summary at that. PMA for the win. All the best. Hope you got some value out of all that. All the best, all the best, all the best, all the best. PMA for the win. Don't take no wooden nickels. Remember what your number one job is. Cliche, cliche, cliche. Have yourselves a great day. All the best, and bye for now. How many times can I say bye for best?